Hey guys, how's it going? I saw a really good interview video on Choom. He's this is John Chris Bogard. He's the CEO of Choom, and he's presenting his company in on this cannabis, on the Money Show cannabis event, and I'm gonna be going over it. And I heard some pretty interesting points, and I'm gonna review them and tell you guys what my thoughts are on the whole video, I guess. Okay, let's begin.
Good afternoon, everybody. Thanks for spending some time to come visit with Choom today. Hope to enlighten you a little bit on the Canadian marketplace, why it's relevant, some important legislative changes that really make this a once-in-a-lifetime opportunity. We believe an important and very seismic shift in legislation are going to create an opportunity mostly north of the border, and we'll sort of look at what's happening. So why is recreation cannabis important? So we all know Canadians love hockey. What you probably didn't know is it's an $11 billion industry. This is a significant market within our country. And there are new analyst reports, most importantly the recent one by Pacific International Securities cannabis analyst Jason Zanderberg, that pegged the Canadian recreation marketplace, cannabis related, to be north of $10 billion by 2021. That's an important segment. Why is that important? Well, obviously, it's a new industry. So the market share is wide open for innovative companies, dynamic companies, capitalized companies, of which Choom plans on taking a very strong position in. The other important part of it is it will be legal recreation-wise upon passing the Senate in June of this year. That means that Canada will be the first G20 country to have full recreation cannabis laws. And that's important. As investors, what you're always trying to, and what I try to do as an investor, is mitigate risk, maximize upside, and there is a lot of risk in new entities and new businesses. So how do we offset a little bit that risk? Well, in the U.S., you have significant federal risk. So even though the states are rec, I think it's 29 states now, you still have that federal risk looming over you. And you can see the market shift daily up and down depending on the shift of the policymakers that be. So our Prime Minister has been very vocal about bringing this through to the Senate in June. We expect it to pass. Obviously, part of the risk factor is, will it pass? Our analysis is the worst case scenario is it might get delayed, but we expect it to pass the Senate in June, which is a seismic event in Canada. So what does that mean? We look at a bit of a breakdown in the size of the market and why it's important. Currently, $5.7 billion is the size of the illicit market in Canada. We believe it to be bigger, but that's a Stats Canada report. 1 in 6 Canadians are active users of cannabis, so we have a high adoption rate of recreational cannabis, not just medical. So as you may or may not know, we are legal medically in Canada. The estimates are the recreation market is 90% of the existing marketplace. So we look at what's important medical to recreation. The reason we focus Choom as a rec brand is because of the pure size of the market. So 90% of that market in rec, that's where we want to be. That's where we've positioned ourselves, and we'll illuminate that a little bit further on in the presentation. Now, just to put a handle on what that looks like, the size of the cannabis market in Canada will be bigger than the entire U.S. snack market by 2021. So now we can say hello to Choom. So when we first started building our rec brand, we knew a couple things. We wanted to be fully integrated, but we wanted to start with a strong brand presence. As a consumer product, and as many of you use consumer products daily, we all know brand is important. And as a new industry without established rec branding, it really gave us an opportunity to create something meaningful. And how do we do that? Well, Choom is a great name. It's actually the Hawaiian word for smoking cannabis. So the local word for cannabis is pakalolo, but to Choom is to smoke. So there's a bit of history and a bit of legacy that we wanted to be associated with. One option when you're building a brand We could have created a great logo, which I think we've done, with no meaning, and then try to create the meaning and the content behind it. We went the other way. We chose a name that has deep, meaningful history that we think would be important in building a brand. Another layer on top of that, other than just the historical use, in Hawaii, was your ex-illustrious leader, Barack Obama, and his association with it. And I don't know if any of you knew this, or a bunch of you might, but he was part of a group of high school students in Honolulu that belonged to a group dubbed themselves the Choom Gang. And when asked about it, unlike Bill Clinton, who swore he never inhaled, Bill Clinton was, he said what he said. Barack Obama was queried with that, and he said, of course I inhaled. That was the point, wasn't it? So he embraced that legacy. We thought for us to be able to tie into an important and relevant figure in North American history and politics was another brand building opportunity that we wanted to participate in. So that's where we sort of came up with the name, and that's where we're driving our marketing towards. There he is there, peace sign up. That cake says, class of 1979, the Choom Gang. Well covered. If you Google it, there is a mountain of information on the web. ABC News have reported on it. There's books been written about it. It's an interesting story and worthy of a few minutes to look up. So now we'll talk about our strategy. We're not just a great brand. We are a fully integrated company. What does that mean? We grow and produce. So we control our own product, and that's important. The vertical we control, from growing to wholesale to retail to branding and marketing, are all encompassed within Choom. So as great as the name it is we have a lot of infrastructure in behind it and a lot of multiples to be able to create value. Retail opportunities, additional products and brands. So Choom is our key brand, but we will also bringing in other brands underneath us. Established black market brands we'll be looking to acquire, as well as some existing white label brands. Now there's a little vision on our retail stores, just to give you a sense of what they're going to look and feel like. Again, those are great pictures, but the work that was
I just want to add that this company is very highly focused on brand. He was saying that they are going to focus on buying out like the established illegal brands, and they're going to be establishing more brands as they move towards recreational. At least that's what he was talking about. I guess it will continue the video.
Done. We brought in one of the leading retail design teams in North America to create this vision for us. Point of sale, traffic flow, merchandising, all of it was really well thought out and put together. And this will be the look and the feel of the Choom retail storefronts moving ahead. Why do we want to be in retail? The best margins are in retail. I never grew up wanting to be a farmer, so no offense to any farmers out there, but it wasn't my boyhood dream. So if you look at some of the companies in our space that are focused wholly on growing, their margins of profitability are really hinged on the price of the product. And what we've heard and what we've seen is that in 3 to 4 years, when all of the growing capacity that Canada currently has, which is industrial in size, the biggest in the world, when it comes on stream, the effect would be downward pricing pressure. So if you are only involved in the commodity side of the business, there's some risk. We like offsetting that risk by having our own retail, which of course is where the higher margins are really ultimately captured.
So that's interesting. He says that retail is, the margins are very high. So if that was true, why doesn't liquor stores, Alcana, which is basically a retail, why doesn't the stock go like rise higher? Because they're the ones that are gonna be in retail. Maybe, I think honestly, I thought like growing it was the highest retails. I mean, he makes a good point when he says that in the future, there's going to be so much demand that the retailers will actually be benefiting because there's too much demand in Canada, so the price of the per gram goes down because all these facilities, all these grows will be competing for business with each other so they can sell their product and move their product. Maybe that's what he's referring to as in retail will have the better benefits. Let's continue on.
Now, what does that look like? There's beautiful Canada. We currently have over 17 applications in Alberta right now with retail leases secured, which is part and parcel of the application process. We have 7 in BC and 1 territory. And in Saskatchewan, which actually by their legislation is our favorite province to be in, we have over 32 licenses applied for. So what you're really looking at here, everybody, is shots on goal. Until the provincial legislation comes into play, which will be post-federal approvals by the Senate in June, they'll start awarding licenses. We expect to get a handful of those, and we honestly don't know how many, but we're continuing to build up the opportunities. And we will be looking at expanding that into the East as the legislation allows. So the reason we're not in the East Coast right now is because the legislation, especially in Ontario, do not want private retailers. So we're not focusing any efforts, any capital, human resources, until there's a little more clarity on what that's going to look like. But we're very comfortable about the strong footprint we have in Western Canada, and we will continue to grow that over the coming months. So we have 4 facilities currently. We have one in Vernon, which is basically our Napa Valley of Canada. We have a facility in Souk. We have a facility in Chemainus, and we have another one in Saskatchewan. This will be our sort of premier agricultural center in Souk. It is already licensed for 750,000 square feet of municipal approvals. And we'll be looking to grow that as we need the capacity. We do not want to overbuild. We have a growth strategy that goes in line with the growth of our retail and the growth of the market. That's just a quick overview of the actual internal capacity that we do have.
Okay, I just want to add, he says that facility, I mean, okay, so I know I made a video before about saying how Choom didn't have enough capital to do everything. Well, their strategy is smart right now because that facility that they have, they don't have to build out. They don't have to like renovate until they see that they need the supply. Then they'll tap into the facility as time goes on, as they see the market grows. So it's a smart play by not fully developing that facility right away and just holding off and just focusing on seeing where the market goes down the road. So yeah, that's an interesting strategy. Let's continue the video.
Which is over 68,000 square feet of canopy within our current holdings. Management team. So having a fully integrated company needs some serious human capital. This is the start of what we believe is a very strong team to be able to execute our business model. Myself, I'm a capital markets expert. I've been involved in 20 plus years of M&A, fundraising, institutional, retail, and in a heavily capitalized business, which we are in now. The skill set that we have to reach institutional investors, investment banks, analysts, we've done it before. I've done it before. Our team's done it before, and that's part of the experience and the expertise that comes along with the Choom. Michael Forbes, when we talk about our retail strategy, he is a pharmacist by trade, but he actually owns and operates 9 pharmacies throughout Western Canada. And I promise you, if you think about a regulated industry, which cannabis is, there's probably not a more regulated industry on the planet in both the U.S. or Canada than pharmacies dealing in schedule-run drugs on a daily basis. So the ability to roll out a retail strategy for us in both licensing, building, compliance, I don't want to say it's easy. Nothing is easy, but it's certainly not as difficult as the pharmaceutical market. So we're well positioned to capitalize on that. Ian Lang, again, builder. He's a commercial builder, been in the industry for 20 years. So as we look to expand our operations, we have a team that has municipal expertise, and all of the facilities to date have been in Souk have been built out by Ian and his team. So we're well situated for the growth strategy there. And a recent acquisition is Chris Gagan, our SVP marketing. So as a branding company, as a marketing company, we need to really address a consumer-facing product, of which we are. Chris has been in marketing and branding for 20 years. We liked him particularly because of his lifestyle branding expertise. He was with Raceface, Fox Racing, Sugoi Biking, which is a big North American lifestyle brand, and brings a lot of vision into us growing that important brand throughout the country. So this is just a quick overview of what's happened to date. I think most recently, one of the most important investments we had is with Abcan, well-known LP in the country. They have about $130 million in the bank looking for M&A transactions that they believed would help them introduce their highly medical-focused company to the rec branding. So they invested $4 million into an institutional round we did 2 months ago. It was $7 million in total. They were our lead participant in that. We also were able to secure a supply agreement from them. Their reputation is they are one of the best cultivators in all of Canada, and we were happy to be able to acquire some early-stage products so we could execute on our retail strategy. The 4 buildings I've talked about, they're ACMPR applications. We have 4. 2 are under offer. We expect to close them this month. 2 are secured, and they are the platform for our growth strategy moving forward. Our documented brand history. So we talked a little bit about the importance of a documented brand history. I think there's a lot of value in North America for that, and I do believe there's some global opportunities on the strength of that brand behind it, and we'll be looking at those. And our expansion capabilities. You know, as this market grows, we've seen in Colorado, we've seen in California that upon legislation changes from the state level that they had significant growth. We call them curious consumers. So we're not just looking for, you know, black market customers. We're looking for people who now, maybe some of you, that once it becomes legal, are interested in the product. So the growth rates in the curious consumer segment are probably the biggest growth opportunity that we will have. So our ability internally and to expand organically is very, very important. You've seen from us a solid 8 months of transactional opportunities that we've executed on. We've grown the company from a $5 million market cap to 80 over the past 8 months. A great history of, short history, but a valid history of important value-added transactions. If you expect that trend to continue, I think Choom is an interesting opportunity to look at. We welcome due diligence. We welcome questions. We like the opportunity to engage with investors, explain our vision, and hopefully we've illuminated some opportunities for you today. I'm happy to take a couple questions. We'll start at the front. We've reached out. We haven't heard back, but I doubt it. Yeah, yeah. Sure. Yeah, Haiku is a very, I mean, I love what Haiku is doing. They're very comparable to what we're doing. They're brand, they're vertically focused. They're very brand heavy. They have a similar retail strategy, though they went about it a little bit differently. So Haiku opened up coffee shops in important centers around Canada to start building the brand and the awareness. We chose just not to go that route right away because we knew that the municipal guidelines are going to be so strict. So we know the provincial rules very well, and each province has its own guiding retail guidelines. But what's going to change dramatically is the municipal guidelines, and nobody knows what those are. So we chose not to put the investment out until we had a better understanding of what that looked like. And for us, we segmented ourselves and went after retail opportunities that we thought would have a great chance of getting licensed. So a little bit less risk reduction, but maybe not as aggressive on the forward branding.
There's a lot of thunder lately. But anyways, he mentioned Haiku. Haiku was more aggressive on branding, and they have a more conservative strategy where they would find retail locations that are not that they know for sure they can open up a dispensary, and then their dispensary is also going to be custom built because they brought in people from the United States, and their dispensaries are gonna look really nice, like Madman kind of dispensaries, at least from the pictures anyways. I'm hoping they open one up in Edmonton so I can visit it. Let's continue on with the video.
No, wait. Yeah, that's a good question. So we did actually bring in the franchise. So the question was, are we going to be corporate or franchise? What does the opportunity look like? Our focus is corporate stores, and everything that we've mentioned there to date will look like a corporate store. We want to capture all of the profit for Choom. The only one that's going to be a little bit unclear at the moment is BC, and I'm from BC, and it hurts me to say that our provincial guidelines are very slow to having any clarity. So they're getting there, they're close. What they have said is they do not want vertically integrated companies. So as much as I can have, I'm welcome to own a retail store, and we have 7 opportunities in BC, I will not be allowed to sell my own product. I still like the margins in retail. We still need to create a diverse array of products for our customers. So we're going to take those on as corporate, and we will do a very few franchises to wrap that up. We don't know what the product looks like for right now. If everybody just I'll illuminate how the leg.
It's interesting. They are planning to franchise some of their stores. That's an interesting concept. I just wanted to point that out because I was looking into getting into franchising, but I mean, if Choom had a franchising and I really like this store, maybe I'll get into it, or maybe I'll just invest into the company. Yeah, let's continue the video.
Legislation is moving forward. Come June, it will be dried flower and oils only. There'll be a lot of accessories, a lot of the edibles, a lot of those products will not be allowed to be sold in Canada. They will take 1 year. We've heard October 19th of 2019, they're going to let some more come into the market, but it's going to be fairly restricted right now, but we'll have to wait to see what happens in June. Correct. Yeah, that's a great question. And those are inflection points in a company, no doubt about it. So on Souk, we are expecting cultivation literally any day. So it's Health Canada. I wish we could give you a firm date. They won't give firm dates, but we have submitted our evidence package, which is one of the big catalysts. We've answered every question they've had coming back concerning the facility. So as far as we're concerned, there's nothing left to do but wait for that cultivation license, but it remains to be seen. Sales, and just to finish that.
I just want to point out that's very similar to Namaste right now. They did everything they can, and they're just waiting for Health Canada to give them the sales license. So, it's Canada. They take the time. They're very slow, and maybe there's a good reason for it. Who knows? Let's continue.
On sales, usually it comes after, though we have applied on our Saskatchewan facility to be sales only. And that looks probably a 4-month process. Yep. Yep. So Vernon, our Napa analogy there, is in detailed review. And the other facility in Chemainus has submitted, well, be submitting its evidence package in probably 3 months. So fairly advanced.
How much cash you have available and how much debt?
Sure. Zero debt. We do not do debt financings. We have never done one. We don't expect to. So we're very clean on the debt side. Capital, pending closing of that cultivation license, we will have approximately $8.5 million in cash. 96 million.
Last year, all the Canadian companies basically said, we're raising 10 million, 20 million, we're going to be building these giant grows.
Yeah.
Now we believe that, I asked every one of these companies, what did they think the price was going to be, and they all guaranteed me that the price was going to stay the same. Since then, of course, prices have come down.
You mean the price of the stock?
No, the price of the cannabis. As all these people grow all this product. So you say you like lower prices, and are you still going to like the margins as all this cannabis in Canada hits the market?
Yeah, I mean, we thought about that too. It's why I think our fully integrated approach is obviously insulates us from a little bit of those pressures. We're not immune to it, of course, and the higher the price, the better. I still believe internally that there'll be a very high premium for high quality flower. We're putting a lot of effort into the value added products and the derivatives market because we believe the margins are higher there. So we don't know what they're going to be. I do expect in the first 12 to 24 months to be a bit of a supply glut. But as the cannabis comes on stream, obviously we expect pricing pressure to come down. Now that is why it's important for Choom as the retailer. I decide who gets their product distributed throughout our retail footprint. So chances are I'll probably choose my product. So it puts us in a very strong position comparatively, and it's why I think there's so much focus from our end on retail. No matter what those margins are, we don't really know, to be honest. We expect them to come down, but whatever margins are available, we will capture them. I'm sorry, in the black?
Yes. Recently, Constellation Brands made some news about wanting to put some cannabis beer in Canada, and I know there's some cannabis liqueurs in the works. Are you interested in those products?
Yes, and we're looking into those. One of our partners, actually, Mike Forbes, owns a Salt Spring Brewery. But the reality is that at least for 1 year, those products aren't going to be allowed to be sold. So we are putting some time and attention into our SKU lines, what's going to be available in the short term, the medium term, and the long term. But for right now, as there is no clarity on whether beverages, for example, will be approved, we're not putting a ton of time and attention into it. Yeah, I think it was a perfect marriage, to be honest. I mean, we know that they liked it. They wanted to get into the recreation space, which they weren't really focused on. We have a great retail footprint, which they have no access to. So that was good for them and for us. What we got out of it, we loved the investment. I think it was a strong endorsement of our business model from a reputable company. We do access some high quality flower in the short term, which we need. So I think it really was a very synergistic, investment. Yeah, so that's a great question. So, especially the gentleman in the back was saying about all these companies raising 50 million, 100 million. I do think those days are gone a little bit. It's a different market now. But for us, and how I've always built out my companies, dilution, you're investors. If you invest and you own in my company, I'm one of the largest investors, in Choom. So how do I manage dilution? How do I maintain my ownership? And that's raising money on milestone achievements in bite-sized chunks. So I would never dilute the company, for $100 million today when I think I can unlock value.
When I heard that he wants to unlock value and slowly raise money over time, that is a smart strategy, and he's diluting his, how do you say it? Like he cares about his company, he cares about diluting himself, so he will only dilute himself on small chunks for just enough money to get by and try to unlock value using the capital that he raised, instead of just raising a ton of money and then just totally diluting the value of his share price. So Choom is very smart. That's why Choom is not accepting. That's why this guy is not accepting like a buyout from Aurora, because he wants to grow his own company. He wants to make a great company by himself. He doesn't want to just be bought out like Haiku. He wants to create his own great company. So I think this guy's very smart. I'm definitely eyeing Choom as an investment for a future investment. Yeah, just I guess that's all I really had to do. Share my thoughts on. Let's continue on with the video.
In milestone developments over the 12, 18, 24 month. So we didn't go out looking. We could have probably raised 25 million easy that round. We raised 7 because that's what we needed. The next financing, and we will be looking for additional funding in June. Again, I don't think you'll see a massive dilution with a big institutional round. It'll just be as much as we need with a little cushion to execute our model. Then next year, if we need more, we'll go get more. But I like to manage dilution as much as possible for our investors and for myself, who is an investor. Yeah. Anybody else?
What sort of growing facility do you guys have? Is it a greenhouse, or are you guys doing organic?
All indoor. All our facilities are indoor. Yep. Yes, ma'am.
I read that revenue projections for dispensaries are somewhere in the neighborhood of $4,000 per square foot. Is that accurate?
You know what I love? There's a couple really good statistics, and I think it really depends on where you're at. But I read one last week that said dispensaries sell more per square foot than Whole Foods in the U.S. Yeah, I mean, look, we know some of these dispensaries that we're looking at now. Here's a perfect example. One, because it's legal, one dispensary that we know of is in the back of a grocery store. It's 400 square feet in a 5,000 square foot grocery store, and that 400 square feet outsells the grocery store 2 to 1. Right? So, we won't know what it looks like. I think retail is very opportunistic for us. We love the margins. We don't know what's going to happen. I'll tell you what we know will happen. The minute we go legal, those dispensaries will lose probably half their revenue in the short term, because half of their products will no longer be allowed to be sold. So they're operating in the gray market right now, but once they go into the white market, which is upon federal legalization, half of their products they currently sell, the derivatives, the vape pens, that revenue stream disappears. But we know that. We have our eyes wide open. We want the footprint. We want the historical customer base that comes with it, and we'll regrow that business on that footprint. Yes, sir.
The province of British Columbia, specifically Vancouver, has a number of gray market retail spaces.
Yeah.
They're looking at incorporating that going forward past the legalization.
Correct.
Would What's your thoughts on that, or do you already have a presence there?
Yeah, we have a pretty good presence. We know a lot of the retailers in Vancouver. Again, the opportunity there looks like this. Our provincial government have said black market retailers will be welcome to apply. They won't be ostracized. Alberta, almost the opposite. If you had a black market retail dispensary in Alberta, don't bother applying. The AGLC will not approve you. BC, a little bit more liberal. I think they want to do, incorporate those existing businesses that have licenses. So the differential is, in Vancouver as an example, you can get a city business license. So what the provincial government has said, if you were doing it the right way, you got a business license, you were operating in an existing facility that gets approved, then we will welcome you to apply. So they have what we think is a better chance than a new applicant. But again, they still have to go through the same security procedures, the same, RCMP checks. There'll be a lot of hoops to jump through to get their final licensing approval. Mike, how am I doing for time? Sure. Anyone else? Yes, sir. Correct. Absolutely. I think the retail investor base in the U.S. is significantly important. It's large, it's active, it understands the space very well, which we like. We like educated and activist investors that know and can identify the opportunities of which we're one. So yeah, retail in the U.S. is critical. Yep. And that's it. Thanks, everybody. Appreciate it, and welcome. Thank you.
I was actually after I saw that video, I was thinking of buying some Choom. And then all of a sudden the stock spiked up $1.40 on, I don't think any news, like nothing. It just spiked for some reason and hasn't dropped yet. I'm probably gonna dip my foot into the stock. And then if it dips down like lower, I'll just add more and more, because I believe in Choom for the long term. I think it's a good investment. I like the way the stores look. The Aurora is going to be their business partner and investor, and yeah. Thanks for watching watching a really long video, and if you actually made it all the way down to 37 minutes, congratulations. And thanks for watching, and have a great day. Bye.